All right. Hello, everybody.
Hello.
Hi guys.
Hey. All right. Welcome to CargoTrans FreighTea webinar. Thank you for joining us today. My name is Jennifer Oliveros, and I'll be your host. Today, we'll discuss the latest developments in international freight and domestic transportation, key market trends, and practical ways businesses can implement to strengthen their supply chains and control transportation costs. Before we get started, we'll take a brief pause to review the disclaimer. Everything we are covering today is meant to inform, not advise. Today's webinar will last approximately 30 minutes. Please submit questions through the Q&A or chat feature. We'll answer as many questions as time allows at the end. A recording will be available following the webinar. Today's blend is brewing with valuable insights and discussion. We'll be covering hot headlines, what's brewing this month, strategy spotlight, sip and share. Joining us today are Jamie Huber, our LTL Truckload Product Manager. Hey Jamie, how's everything going on your end?
It's going great. Thank you, Jen. Just deeping it real.
Awesome. And we also have Barish Aitan, our Director of Client Success and Commercial Operations. How has your week been so far, Barish?
Jen, hi. It was great.
Hey.
I mean, Nick's huge comeback win last night. World Cup starting today. Couldn't be more excited. I got my Turkey jersey on, and I have two teams to root for this year, both Turkey and US. Both of them playing in the same group.
That's awesome.
But yeah, hopefully one of them at least, if not both, are gonna go deep into the tournament. So we're excited about that,
Nice.
and
Well,
looking
good
forward to this
luck.
conversation with you too.
Thank you. All right. So with that said, let's get started with an international market update. Varish, can you share with us the latest news and developments impacting our industry right now?
Right. So on the international side, there is a pretty major trans-Pacific market shift going on right now. This is more than just a typical peak season increase. We can see on the graphs here that the rates on both East Coast and West Coast have doubled since March. We were around like 3,000, 3,200 early March for East Coast and around 42 to 4,400 for West Coast. They've doubled since then. But what's really striking is that the most gains really occurred in the recent weeks. Just last week, the West Coast rate has gone up by 51% in 1 week, and East Coast went up 25%. So what's going on? Why are they rising? Now, the shipping lines have been trying to control capacity for a while, right? The rates have been under downward pressure entire 2025. They tried to cut capacity, keep a floor on the rates, and that has been largely unsuccessful until recently. But those efforts have finally yielded results for them. And the capacity blank sailings just created this artificial reduction on supply that started pushing the rates. The peak season demand is also building. Now, traditionally, that starts later in the summer, right? Because they want to get their product into the US for back to school shopping, holiday shopping. But this year, we are seeing a few drivers that move that forward a little bit. One of them is the BAF, right? If you are on a contracted shipper, you are like big box retailers moving freight inbound on service contracts, you have a bunch adjustment factor, a BAF, and that is typically adjusted quarterly. Now, we know what happened to oil prices, right? And this quarter, the Q2, due to the Iran conflict, so that is going to reflect on the Q3 BAF for contracted importers. So it's like Maersk, MSC, the big ones are pushing the BAF up by 80% starting July 1st. So the shippers are trying to avoid that and trying to ship that cargo now before that BAF goes into effect. The other reason is the earlier buying inventory. Again, this is going to get tied to oil. The manufacturer prices are expected to go up due to the raise in energy prices, right? We
Hmm.
saw earlier this week with the inflation reports that the China factory gate inflation has gone up by 3.9%, which is quite high. So suppliers are expected to raise their prices due to oil, and the buyers are trying to lock in the current pricing. Now, the capacity matters too. People are afraid of like not being able to book. They're afraid later on, so they are rushing to get space now. That is also creating an extra demand on the market right now. What we are watching is again the BAF numbers, the global oil price movements, and the peak season demand strength for the remainder of the summer. We are watching those things, see how they're going to drive the market. The story is a little different on the air freight side. The air freight side was like much more severely and swiftly impacted by the Middle East crisis because what's happening there is impacting an entire swaths of airspace there. It closed, albeit briefly, the Dubai airport, Doha. Now they've all been largely reopened since then. But when that first happened, there was a big shock to the air freight market, as you can see on the bottom graph here. We were at around $2.20 last year, around this time on the global air freight index. That has gone up to a peak of around 340. But then ever since then, as you can see on the graph in recent weeks, that actually has come down a little bit. What is happening here is obviously the market has found a way to move around those disruptions, found new lanes to route the cargo. For example, we know like they were moving via Middle East to Europe, combining LCL and air for a faster transit because they would just bring it to like Dubai on a boat as an LCL and then fly to Europe to avoid the Suez Canal disruption, right? So that hasn't been happening. So they've been actually trying to find different ways of doing the same thing via LA, right? Bring it to LA and then fly it from here to Europe. So
Mhm.
the market has found a little bit of a way to move cargo around this conflict, around this disruption that has created a little bit equilibrium on the air freight market. So
Okay,
yeah.
thank you. Thank you very much. That's very helpful and provides a lot of context for what's happening in the market right now. Thank you for that. Now let's shift to the domestic market. Jamie, right now we have seen that the biggest challenge in domestic transportation isn't just cost, but also managing the growing complexity behind it. Can you tell us a little bit more about that?
Sure. I think the hottest headlines right now when it comes to domestic transportation, if we're looking at LTL, we're seeing, the rates are rising earlier than what the rates would normally be rising when it comes to a carrier taking a general rate increase. That usually happens in a few months from now, but we're seeing some that have already put some in place, and the expectation would be that the rest are going to follow. What the carriers have been focusing on too is slightly different. Their strategy has become that they're focusing on the yield versus the volume, and it's working for them. So on top of the rates rising with these general rate increases, the carriers are trying to make decisions that continue to be more operationally cost effective on their side. What that's going to roll into, I think that's going to remove some of the flexibility is the fact that the carriers are most likely going to also become more selective on the freight that they want to handle. They're not looking to gain more business, so to speak. They're looking to make more money handling the business that works well for the operation. So the impact that's expected is that as a customer shipping freight, if a carrier has a decision of I can only pick up this one or I can pick up this one at that time of the day, there's a good chance that there could be some delays in pickups that would be expected.
Hmm.
So there are measures that can be taken on the shipper side to try and protect yourself from that. And we'll talk a little bit about that throughout this webinar. There are things that can be done, and it will combat a little bit of the issues that are going to come back as a result of what the carrier strategy has become. On the truckload side, the biggest story has been the outcome of the Montgomery case. It's changed the landscape a little bit for the brokers when it comes to carrier selection. Risk is much higher than what it would have been in the past. Your task now of vetting a carrier is going to be more time consuming than what it would have been before. And then coupled with that, the carrier pool itself, being as it's been shrinking, is it's smaller. So it's smaller. You have a smaller pool to pick from, and you have more involved when it comes to vetting the carrier, themselves. I did think about this a little bit today as I was running through what we were going to talk about on this webinar. And I kind of came to the conclusion in my head where after 20 years of being in transportation, wouldn't we already be taking measures though to be sure that we are vetting a carrier properly before we give them a load for our customer? I mean, as a customer, that's what you want from your broker. You want that vetting process to be in place. So yes, this is something that's a little bit different in terms of risk, but like us, I would think that most brokers, I would hope, have already got a solid vetting process in place to be sure that the load's getting where it needs to go.
Okay, thank you, Jamie. So overall, freight isn't just getting more expensive, it's getting more selective, less flexible, and more complex to manage. Well, thank you for sharing that, Jamie. Let's talk about what's brewing this month. On the international side, Barish, could you share some of the key updates, opportunities, and topics that should be on everyone's radars for this month?
Right. So the first thing, let's talk about capacity, right? Because capacity was the initial starter of this upward movement on the freight rates, the capacity control. Shipping lines, blank sailings, they remove capacity, they start pushing the rates up. Now, the East Coast still remains the tightest on the market. There are various reasons for that. One is that now we are seeing like some shipping lines are putting more extra loaders to the West Coast, starting with the second half of June. Obviously shipping lines will try to capitalize on the high freight rates, right? There's a nice balance they have to strike here. They put too much space, rates go down too much, but then they're gonna try to carry this cargo at these really elevated levels. So they're putting extra loaders to the West Coast in the beginning because this is the reason why West Coast recovers faster is because a round trip from, let's say, China based ports, Shanghai to LA can be 38 to 42 days, roughly a round trip, right? So you put a vessel, you can get the container around in 42 days. If you put an extra vessel to East Coast, that round trip is actually 70, 80 days, right? Even like 90 days, depending on the time. So it is faster for shipping lines to inject space capacity into the market for the West Coast. So East Coast always lags in recovery in that sense. The other reason is for East Coast, you have to go through Panama Canal, so there's a restriction on the vessel size you can utilize there. So that also makes it harder. So East Coast definitely is the most constrained trade right now, and demand to East Coast keeps continuing to outpace the available space. The other item that has come on the news last week, I believe, is the El Nino phenomenon that's expected to affect Panama Canal, right? For those that may not know, the Panama Canal is actually there's actually a mountain range in the middle. So you have to bring the vessels over this. I actually once joined a vessel on the Pacific side when I used to work at sea, and Panama Canal is fascinating. And the
Oh,
next
it's
5 days
interesting.
we transited back to the Atlantic side on through the Panama Canal. We're going back to Europe on that vessel. What happens is, yeah, so the vessels have to go over a mountain ridge almost, right? And there are two lakes feeding water to these locks, and this is just gravity. Every time you vessel transits, you lose water. So Miraflores and Gatun lakes feed these locks, and if they are very low on water, the transits can happen, or it has to happen in a much reduced capacity.
Hmm.
So there is an expected El Nino later this year that's gonna I suppose create some drought conditions there. So just as a precautionary measure, now in isolation, this reduction is not a big deal. They just reduced the draft limits from 50 foot to 49.5 feet. But this is just for precaution to start maintaining water levels now. Last time when this happened was, I believe, in 2023, where we had a severe draft there, and some shipping lines actually started moving freight on their well, it's not trans-Pacific anymore, but like China East Coast lanes through the Red Sea, Suez Canal, Mediterranean, Gibraltar, and Atlantic route instead of because Panama Canal got severely restricted, right? So they started, like MSC started doing this. And then, but as we know right now, Red Sea is also not an option. So if Panama Canal gets severely restricted later in the year, this is going to put even more pressure on East Coast capacity. Like East Coast is already under pressure. This is going to further reduce how much cargo can move from Asia to East Coast. That's another thing we are closely watching. Again, right now, the reduction in draft is just precaution, but we'll see how El Nino turns out later in the year. Few other items we are watching. Obviously, look, demand for freight is still there, right? Peak season surcharge for the second half of this year, we are seeing numbers around 2,000 FEUs for peak season. So that for the second half of June, we are seeing numbers on East Coast hitting 6,400. I'm sorry, for West Coast 6,400 and East Coast $7,700. This is like let that sink in for a moment because that is around almost 3 times what it was in March, right? These are the
Hmm.
spot rates we are seeing for the second half of June. And again, Right now, unless there is a ton of injection of capacity, there is enough reasons how shipping lines would be able to push these levels. It's obviously is going to depend on the oil markets, how bunker boom moves.
Hmm.
Speaking of demand, though, so there was an article earlier in this week, I think, at Wall Street Journal about National Retail Federation's forecast for the June. They're expecting 2.25 million TEUs to come into the United States in June, right? That is 14% over last year's June numbers. What does that mean? We expect demand to actually remain strong for the remainder of the peak season surcharge. This is again because of the reasons I already highlighted. Imports are expecting increase on their manufacturing costs. They expect their product will get more expensive down the road, and they expect the bunker for this next quarter is going to go up. So June, the front loading of peak season is happening right now. So peak season would normally start later, but we are seeing that demand now. And again, the demand will remain elevated for June, and that should keep the rates elevated. Air freight capacity is more balanced. We see a little more availability there. The rates have stabilized there. One wild card there could be, if the ocean freight rates keep going up even more from here and air freight remains softer than it has been like in the previous months, will we see a rotation from ocean to air, because there's going to be a point where ocean gets so expensive, shippers look at this, air freight rates and the transit savings there. They may start moving some cargo, some high value cargo, some fast cargo. We also see a little more shift toward air freight, obviously towards the end of peak season, closer to the shopping season, to
Hmm.
get the cargo here on time, right? And yeah, with the ocean freights, if they stay so elevated, maybe there will be some movement into the air freight from ocean, and that can increase the rates upwards.
Right, right. Yeah, and obviously looking for reliability and speed ultimately, right? Thank you,
Sure. I
Barish,
mean,
for
there's a
sharing.
price. There's a
Hmm.
price tag to everything, right? If the price tag makes sense, yeah, I mean,
Exactly.
we can see that happening.
Absolutely. Thank you, Barish. Now, Jamie, let's talk about one second. I'm sorry, apologize. What's brewing this month? Could you share a little bit more on the domestic side? Any developments that everyone should be aware of?
Sure. I think what we're seeing this month on the domestic side, Jen, is probably pretty common. But when we look at the LTL side of it right now, what we see is we're seeing a lot of re-rates coming back on invoices. There's been quite a few recent NMFC changes, and that shift in the NMFC change going from a class to a density-based classification scale, I think is something that customers still are getting used to, or maybe not fully understanding what that means. It does cause a lot of re-rates. Unfortunately, those happen to be ones that are very high compared to what was originally quoted. Um, we're working with our customers on that as we see it. We're also seeing where basically what I would call out is that if we're getting the details wrong when we're planning for a shipment from the customer side. So if I'm shipping freight and I'm getting the details just a little off, it's getting more and more and more expensive. And it really ties back to that tale of the carriers are focusing on how can they reduce their own costs operationally? What makes the most sense for them to handle? How do they get paid for the freight that, they want to have on their trucks? How do they maybe push aside the stuff that maybe doesn't work out so well for them operationally? So when it comes to the NMSC class changes or those unexpected accessorials that are throwing those freight charges through the roof compared to what was originally planned, it's going to probably continue. That's where carriers focus on the yield. They're going to get more for what they're already handling. But there are ways to help combat that a little bit, of course, and that's what we're here for. Um, so on the truckload side, spot rates, they're continuing to climb. It's intense. The dry van spot rates right now, I think if you compare this year to last year, the last number I saw was they're on average about 23% higher than what they were. It's not driven by more volume. It's not driven by demand, whereas it's driven by the fact that, going back to the Montgomery case and what we talked about on our last slide with domestic, the carrier pool is shrinking. There's fewer carriers out there. There's a tighter vetting process, but at the end of the day, there's fewer carriers trying to handle, these loads. So the rates, frankly, there's just going to be much less pricing leverage. What that means on the customer end of it is that you want to plan accordingly. If you have a truckload shipment coming up, in the past, maybe carriers or brokers or whoever you're working with, they might have been able to give you a rate that was valid for 7 days, not blink an eye at that. That number is getting smaller and smaller and smaller all the time. So you want to plan accordingly, prepare for what your cost is going to be when that truckload is ready. Then you want to go back too as it gets closer, and you have to understand that those rates are changing, by the day, by the week, they change significantly. So yeah, that's basically what we're seeing here on the domestic end.
Thank you, Jamie, for sharing that. Very helpful. Now, on the strategy spotlight, Barish, on the international side, could you share some strategies, insights with our audience today that you think will be helpful for them to be aware of?
Sure. So anything I'm going to tell here, obviously, is actually, it's not even in the current market in general, right? I'm going to outline a few things the shipper should be doing. Booking early, sure, like that's more pronounced right now, given the current conditions. But, book early, talk to your forwarder, but really partner with your logistics service provider, right? Make them your freight forwarder, make them even your customs broker, make them an extension of your entire supply chain, make it part of it. Make them aware of what you forecast for next month, 2 months, rest of the year. Help them guide you, right? They know the market, they know what's going on. So book in advance, speak to them, give them your forecasts, review your allocations for the Q3. If there is way too much front loading of this peak season, maybe the Q3 could actually be a bit softer. That's a possibility, So booking early could be challenging sometimes because you may be looking at the freight rates spot market for next week, and then you may be looking at the spot market for last week of June. Last week of June may look like it's $2,000 more than next week. So you may not want to book that freight. But the way we operate here, obviously, and most forwarders, we will secure that space on the spot market for you. So you have the allocation, you have a spot on the vessel, right, for your container to sail. But if the market goes down, we'll continue it. We'll reduce trade. We'll continue the spot market. So you have your space. Book it now. Tell your forwarder 3, 4 weeks, whatever it is. Again, the biggest recommendation I can give is talk to them, make them an extension, a true partner of your logistics network. One thing to also keep in mind, we haven't seen this a lot on the Trans-Pacific yet, but the spot booking fee, right? We've seen this on some more niche markets that we serve, for example, Turkey inbound. A little smaller, obviously a lot smaller than Trans-Pacific, but also like very small carrier pool, only 1 or 2 direct service available on running on smaller vessels, right? So the shipping lines we've seen have started demanding a premium, almost like a first class ticket fee to ensure your cargo goes on board. So the fact that they give you a booking, you return your cargo to the port on time before the cutoff. If there's a higher paying freight sitting on the dock, they're going to ship that, right? If you got to keep in mind, container vessels, you see these numbers of 20,000 TEUs, 24,000 TEUs, right? But container vessels max out on weight before volume. That is the amount of container they can carry if it was all air, right? 99.9% they max out on weight. So they're going to prioritize lighter cargo over heavier cargo because they can take 2 containers of 10,000 kilos instead of 1 container of 40,000 kilos, right? So keep these things in mind, what your freight is, what you are shipping. You're shipping a lighter freight, you may be at an advantage. There's a chance that you can negotiate something lower. But keep in mind that the premium booking, the guarantee fee may be more common ground in the next coming weeks and months if the situations stay the way they are right now. Also, look at your routing flexibility, right? If East Coast goes so high on the from China, it may make sense to like bring to West Coast, transload, move it on a, FTL, ask Jamie and her team to like move it for you. So there is look, be flexible. You're going to IPIs on Midwest, right? You may be traditionally, let's say like IPIs closer to the East Coast, like Ohio Valley, like Columbus, Cleveland, those areas. It may have been moving via East Coast before, but maybe it makes more sense to move via West Coast at certain times.
Mm-hmm.
Your increase in like your rail may be expensive. Your increase in freight could be minimal compared to your savings on the transit time, right? So be flexible with your routing. Again, this all boils down to talking and partnering with your forwarder. Trust them, ask them questions, keep them on their toes, keep us on our toes. We are here to like partner and help through all of this.
Mm-hmm.
Um, Alluding to what Jamie was saying about shrinking carrier pool on the truckload market, we are seeing the same thing in shipping line. We got the news this week that MSC has become the first carrier ever to have more than 20% of global container market share. That's astonishing, right? There is a shrinking carrier pool out there that is helping to actually control capacity and push the freight rates up right now. So that it's even more important right now to like let your forwarder navigate these for you.
Mm-hmm. Definitely. Thank you, Barish. Yeah, very helpful. Definitely that's what we're here for, to support and provide guidance as needed. And, definitely a proactive planning with your suppliers is key for a successful move. Thank you, Barish, for sharing those advice. And on the domestic side, Jamie, from the transportation perspective, can you share some insights with our audience today as well?
Sure. Some things that we can do today, I think if we're shipping freight, if you're a customer that's shipping freight, the simplest way that you can reduce any of these unexpected costs, because you can't do anything about the general rate increase, right? A base rate is a base rate, but you can do a lot to avoid some of the re-rates that happen that throw all those charges just completely through the roof. Um, and the best way that you can do that is basically just provide all the details about what it is that you're shipping.
Mhm.
Tell us about the product itself. Let us know what you're wanting to put onto that truck, because the more information that you give us, the more accurately we can quote it for you. That prepares you down the road for what that invoice is going to look like. There's no unexpected charge that comes your way, or at least if it is, it's going to be so minimal. What we see is that most cost surprises today, they're not driven by the market. We all see that the rates in the market are increasing, right? But most cost surprises, they're not market driven, they're data driven. Let us help you to understand what it is that sets you up for success. That's what we're here for, instead of reacting to it. So what I would suggest, honestly, is just get back to the basics when it comes to shipping your freight. You want to make sure that you're sharing what the complete dimensions are. Give the weight per pallet. Say how many pallets. Those things are important, and we need all of it. Tell us
Mhm.
what it is that you're shipping. That commodity itself, that's going to be what dictates what your freight is rated. So to say things like general cargo, for example, you're not doing yourself a favor there. The more details you can give, the better off you always will be. And then, of course, the special handling side of things, you want to avoid those delays. You want to avoid the freight being misrouted. You want to avoid it being put somewhere it shouldn't be put. That's when you call those things out to get ahead of that right from the start. And the same with the locations themselves. There's probably not enough emphasis spent on even just the hours of the operation. The last thing you want a driver to do when he's going to make a decision, or that carrier is going to decide which location they want to go to for that last pickup of the day, if you have those hours wrong, you're already out of the mix. So those are things that you can do ahead of time, and it's as simple just as getting those details. And that's really what it comes down to. It saves so much headache down the road.
Completely agree. Thank you, Jamie, for sharing that.
Mhm.
And thank you both. This was definitely valuable information for everyone to keep in mind. Um, that is the tea for today, everyone. We have only 1 minute left. We will follow up on any questions through the Q&A as well later after the webinar. But thank you, Barish and Jamie, for sharing your insights today. And thank you, everyone who joined us. We appreciate your participation and engagement today. A recording for the webinar will be shared following the session on our CargoTrans website. Have a great day, and we look forward to seeing you at our next webinar. Thank you, everybody.
Thank you, everyone. Thank you, Jen.
Thank you all.
Cheers to the tea. Thank you.